Randy, what is this?
This is buyer demand trending in the right direction, Mary.
What? It's all about affordability. It reminds me of the scene in Forrest Gump. Now, granted, I grew up in the 70s, so I remember this, where he took the shirt and wiped his face and said,
Have a nice day.
What a great movie.
Affordability is your friend, smiling at you from Southwest Florida. Welcome to the February monthly market update. Today, I am here with my very dear friend who you know, but a new company.
Randy Williams with Involved Lending.
Welcome, Randy.
Thank you.
Let's get right to it. There's been a lot of talk, Randy, in the news. I mean, even last night with the president on affordability. Mm-hmm. Very important. So we're going to start with a couple of quotes, and then we'll jump into some other things. So go ahead.
Yeah, for the last few years, we have been in one of the toughest affordability environments in modern housing history. Mortgage rates jumped from 3% in 2021 to above 7% in 2023, and that pushed the typical payment up by more than $1,000 a month compared to pre-pandemic levels.
And we saw that, and we kept thinking it was going to drop, and it didn't drop fast. It was a little bit struggle there for a while. Yeah. So what's Mark Fleming of First American saying?
The forces that eroded affordability in the aftermath of the pandemic, strong price appreciation and surging mortgage rates, have stabilized. Moderating housing price growth, easing mortgage rates, and steady income gains signal realignment in the forces driving affordability trends.
So if affordability just isn't mortgage rates, let's talk about that. It's also the price of the home and wages. And those three factors bring affordability as to whether you can afford one or not. Right. So, here's some graphs that really talk, or specifically one graph that talks about how affordability improved in the second half of 2025.
Yeah, I mean, interest rates were dropping at that point and prices were stabilizing at that point. Makes perfect sense.
So somewhere around June of 25, and quite honestly, Randy, we saw an uptick in June, July with buyers.
Yeah.
And maybe not, in a second home market, these were primary home owners, but, based on affordability, we saw it.
Oh, quarter point interest rate drop and a half a point interest rate drop, just the confidence you saw in buyers.
Absolutely.
Yeah.
So as we go forward with that, what is our friend Zillow saying?
At the national level, a mortgage payment now takes 32.6% of the median household income. Already the best affordability seen nationwide since August 2022. That's on track to improve to 31.8 by the end of this year. Going in the right direction.
We are definitely going in the right direction.
Right.
And, this particular graph, which is also sourced by Zillow, shows affordability when we get to that 30% or under of income. That is really, they're going to spend on a new home, right?
Correct.
From that perspective. And, Randy, here's some areas that cities specifically that have affordability that is 30% of income or less. Atlanta, Chicago, they were really struggling a while ago.
Oh, yeah.
Right? Kansas City, all those, I'm going to call them snow states versus the sand states, are now coming up because of wages, prices, and interest rate. That perfect blend is really working well for them.
And as I'm looking at these cities, we help a lot of folks from these cities get their vacation homes too.
Yeah.
Yeah.
So that makes sense.
Yeah.
Now, great slide. We are sitting here in the South, right? Where the share of counties where it's more affordable to buy than rent a 3-bedroom home.
Right.
In Naples, are you going to have great affordability near the water, the Gulf? Probably not. But as we move further east, we've got some great affordability. I mean, look at Ave Maria. You're out a little bit of a way, but wow, you get a lot of house for your money out there.
Couldn't agree more. I totally agree with that. Yeah.
Right? So, hey, guys, welcome to this month's affordability. So what is Kara, from the senior economist from Zillow, saying?
This is what small wins years look like for housing. Rising incomes, subdued price growth, and gradual easing of mortgage rates would help buyers regain their footing while allowing homeowners to continue building wealth again. These types of slow and steady affordability improvements are exactly what the housing market needs over a long term.
Yeah.
Yeah.
We're there.
Yeah.
We are there.
Yeah.
The good news is that mortgage rates, you know this better than I do, right? Lowest level in 3 years?
Mary, I'll just give you an example. 50% of the business I'm writing right now is refinancing. We haven't done that in 4 years. So yes, that will tell you exactly what these rates are doing. Helping a lot of folks that I helped in the last couple of years just smash their payments down. It's awesome.
That is awesome. Because, I mean, and let's face it, a 7% mortgage is an average over, 50 years? I mean,
7% itself historically is a really great rate. What we got caught in there was the prices were a little high too.
Right.
So the whole thing, we're circling back on affordability, the whole topic of today. Yeah. So bringing people's, monthly bills down and more affordable has been awesome lately.
I love that.
Yeah.
I love that.
Yeah.
So National Association of Home Builders is saying what?
Yeah. Even slight declines can have a significant impact on housing affordability, pricing more households back into the market, what we're just talking about. Yeah.
And we're going to share with you our closed prices year over year that have been cummed for 12-month period later. So stay tuned for that to see what the local market is about. But, I love this slide. You and I talked about this because it shows you the difference in a monthly mortgage with principal and interest, what that looks like with a 7.2%, a 6.2%, and a 5.9%.
Yeah. And I mean, for the first time in years, I've actually been encouraging people to maybe buy it down just a little bit. When rates were high and we always felt like they were going to come back, I always said, let's not give the bank any money. We're not going to keep this rate for a super long time. It won't make sense. Right now, there's an opportunity not only to get it 1% cheaper than you were a year ago, but to push it down even a little bit further and really set up a 5-year plan.
Oh, nice.
Yeah. So it's a totally different market than it was a year ago.
Yeah, and it's a totally different strategy for folks to get into something that they want.
Right.
I mean, if you're in your major income earning years or, you're looking at them, you're going to make more money.
Right. And we're having sellers help. As sellers get a little bit, as a buyer's market comes into play, the sellers are giving more incentives. So sometimes we're using the seller's money to buy it down even a little bit further, again, making it even more affordable.
Yeah. And that doesn't mean that they have to give away the whole farm. No. They're maybe staying at their price and then giving some money back in those concessions, which is really smart to do. I mean, if you're thinking about buying right now, you need to work with a professional lender like Randy, like the Bartos Group is a real estate firm, because you need somebody that can kind of massage and manage this for you in this market right now.
Set you up on a really good investment. And that's what we do.
Absolutely.
Yeah.
So National Mortgage Professional says what?
Housing affordability continued to improve, reaching its strongest level in more than 3 years as cooling home price growth and easing mortgage rates provided incremental relief to buyers. So true.
Yeah.
Yeah.
Love that. So, home price. Okay. We've been talking a lot about interest. Home price. Now, this graph looks kind of crazy. You're like, oh my gosh, home prices dipped between 22 and 23. This is home price growth. So those in our area, we were seeing 20% year over year kind of increases. It was kind of a little frightening. I mean, great if you owned a property, but a little bit frightening on what the market was doing during COVID. And then, we saw a dip down. This is a national, by the way, chart from Case Shiller. But now look, we do have some moderate growth still. It bounced up in 24 and in 25 and 26 where we're sitting. We still have some moderate growth, which is good for the market because no one's losing their shirt by having bought a house, but it makes affordability better.
You know what I've noticed this year? People have finally left COVID behind.
Thank God.
We were constantly dealing with if I would have done this, or at this time, or if I would have got this rate, and now it's been a little bit more in the rear view. That it is more stable. I know you noticed that too. It is more stable. We are more predictable, and it's just an easier conversation and a less stressful purchase for most people.
Yeah. Right. Interest rates are in a calm area. Right. Affordability, keeps using that word, is great.
Yeah.
I'm with you 1,000%. What is Odetta Cushy saying? She's at First American.
Sure. Affordability is improving, and that matters even if mortgage rates don't fall much from here. House price appreciation has dipped below the pace of income growth since April of 2025, which is slowly improving the monthly payment math for would-be buyers and helping more households qualify at the margin.
Yeah. I mean, when you look at this next slide, Randy, and you see that home price growth is in green, wage growth is in blue. And look at 18, they were kind of neck and neck. 19, 20, 21, home price, you blew it up.
Yeah.
And then, it came back, pulled back. So that was great. And now what we're seeing is a really nice wage growth and a moderate home price growth, which is, again, makes it affordability.
Yeah, I agree.
Just kind of the thing. Likewise, monthly mortgage payments are trending down, which, let's face it, this is from Redfin. If I'm renting a place, and the good news is, there are strategies to get you as a first-time home buyer into a property because you're paying somebody else's mortgage if you're renting.
If you're going to have to pay to live somewhere for the next 10 years, like most of us,
right?
Like if you don't have a mortgage, I guess, but like if you're going to have to pay, whether it be rent or your own mortgage for the next 10 years, it makes all the sense in the world to buy. Like you're going to be making a payment anyways.
That's right.
Like build your own wealth, not somebody else's.
That's right. And, again, I'm going to put a little flag up here for Randy, because if you're a first-time home buyer and you're thinking, oh my gosh, I don't have enough down payment, what can I do? Randy, there's all sorts of options for somebody to get a concession for a down payment, to get a very low down payment, a lot of things to get you into that property.
Yeah. I mean, we have tons of products for folks that maybe make a good money and they pay their bills on time, like they have some decent credit, but maybe they don't have that big lump sum yet. Give me a call. I bet you we'll figure something out for you.
Yeah, exactly. Yeah. Especially if you're paying, $2,400 or somewhere around that a month in rent. Wow, why not pay it to myself?
Yeah.
I'll pay myself forward.
You won't regret it, trust me.
Exactly. So Nadia, what is she saying? She's a senior economist from NAR.
Nationally, a 1% point drop in mortgage rates can expand the pool of households who can qualify to buy by 5.5 million households, including about 1.6 million renters who could become first-time home buyers. That's a huge shift in who can realistically afford to buy. You see that, and you're going to see home prices start ticking back up again too.
Yeah.
It's just like, you don't try to time this. If you're ready to buy, we need to have a conversation.
For all the right reasons for you.
Yeah.
Then have the right conversation so that you can see where that is. Because what will happen at some point is we will flip back from a buyer's market into a seller's market. Right. And, then it gets, you don't have the leverage.
I would rather buy now, get that home at the price that I want it, always refinance. It'll come. It will come. We have historical trends that will show you there will be a time for you to take advantage of those rates, but it will already be in the house that you own.
Yeah, exactly. Yeah. What's our friend, Nadia went on to say,
not all of these 5.5 million households will buy a home, but that, based on our analysis, about 10% typically do. That could translate into about 500,000 additional home sales in 2026. That's the main reason we expect home sales activity to increase next year.
By about 500,000, quite honestly.
Yeah.
It was like 4.6, 4.8 or something. I didn't see the exact number at the end of last year. Yeah. But it's going to go up well over 5. Yep. So that's fantastic as we start to think through this. So, Randy, we've talked about this, and we're going to hit it home a little bit further. So if you don't want this topic, go fast forward down to our local stats. But as affordability improves, buyer demand is responding. And talk about what Rick Sharga had to say from CJ Patrick Company.
Yeah, we're in an incredibly rate-sensitive environment today, and every time we've seen mortgage rates drop into the low mid-6 range, we've seen an influx of buyers hit the market. That's absolutely true. It's absolutely true.
Yeah.
Yeah.
We're going to show you. This is a crazy slide. Now you're going to say, "What? What is happening?" But Randy and I both seem to like this slide, so we're going to tell you about it. When rates drop, buyer activity picks up. So let's think about this. Mortgage rate is in blue,
right?
Really low on the far left, and then jumps to higher on the far right. In the middle, where they cross over, that's where the purchase index was high when mortgage rates were low. And as they crossed over and the purchase index was low, we can see that the buyer activity picks up, right? So you can see from the low that it hit in October of 24, and it's starting to go back up again.
Well, you can see right there when rates started to go up about 4% in that 15-month period. And then now you can see it. Rates are coming back. It
kind of goes back and forth, doesn't it?
Yeah,
right.
It's perfect.
Yeah. So think about that. buyer activity is going to pick up. Randy, I don't know if you're seeing it on your side, but we're seeing actually some multiple offers or something where somebody just missed it and they're putting in backup offers. We haven't seen that since, really since COVID.
I have two people in mind right off the bat as you're bringing that up. We put in 2 backup offers recently, and we just didn't get there in time.
No, right.
Yeah.
And, we don't want this to be a horrible season for you where you have to rush in to buy and you don't get to do inspections and all the wrong things. But, know what you're qualified for, know what you want, have that criteria, sit down and really think what's important to you. Shop the tribe first, as a friend of mine used to say, and then the hut. So you know what kind of community, what lifestyle you want, and then it's all about finding the house.
And you know what else? Like, so many folks think they know what their situation is, and then a quick conversation, and it's their situation's actually a lot better than they thought it was.
Yeah.
So have that conversation ahead of time, and I bet you'll walk away more enthusiastic about your situation.
Love that.
Yeah.
So we're going to talk about buyer demand response to mortgage rate changes. So this is kind of a 5 different scenarios, Randy. Only one of them, from February 22 to October of 22, the interest rates went up from 3.76 to 6.9%. And look at what happened with the purchase index. It came down significantly. But any other time where the interest rates are lowering, and that's in the other 4 of these categories, you'll see that the purchase index, the quote buyer demand change, went up.
Well, we had rates between 3 and 5% for like 12 years. So all of a sudden, when it goes back up to 7, that's a rough time for a lot of folks in this business. But the upside of that is we're used to lower rates, and it's going to come back. So there's some upside in thinking about that.
Yeah. You think really it's going to get back to 3 and 4%?
I don't know about 3,
Okay.
but I would really like 5.
You heard it here first.
I would like 5.
A 5 in the first digit. Yeah. Right.
Yeah. That's just massive
That's a sweet
consumer confidence. It's affordability again.
Yes. Yeah. Sweet spot. So, and we're almost there.
$599 today.
Was it 599? And keep in mind when he quotes that you got to have like perfect, a lot of perfect things, right?
That's what Fannie and Freddie get them for. Technically, you cannot go to them directly to get a loan.
Right.
A mortgage company is going to put a little bit on top of it, but that is still a marking point. It is still a marking point. We have not been below that in 4 years, maybe.
Wow.
Yeah.
Wow.
Yeah.
So great. Today, when he's saying today, we're at the end of February. We're recording a little bit late. That's February 25th. So interest rates may change. This is not what they are forever. Just saying what it is today on February 25th. At some point in the day today, it was at 5.99. Why am I giving all the caveats? You should be.
Yeah.
Sam Cater from Freddie Mac, what's he saying?
With the economy improving and the average 30-year fixed rate mortgage nearly 1% lower than last year, more home buyers are entering the market.
Yeah, so true. And this graph is a big old smile.
Yeah, I like this one.
The big old smile shows the buyer demand trending in the right direction. So buyer demand in January 23 was pretty high, and you look at it now as we're almost higher, and then in some parts of 23. But the big old smile went down, and now it's coming on the way back up. Love that.
I think we've just got some stability with what's going to happen for the next few years. I think the country is sort of just adjusted to better rates,
right?
Better incomes, and confidence is pretty good right now.
And politics, they weigh in and out. Last night was the president. Hopefully you watched that. Good, bad, or indifferent. He's preaching that, the next 3 years are going to be amazing. So from his lips to God's ears, we hope that happens.
Me too.
Mark Fleming, what is he saying? We all know he's at First American.
Sure. Affordability remains challenging, but for the first time in several years, the underlying forces are finally aligned towards gradual improvement. Mortgage rates may drift down only slowly, but income growth exceeding house price appreciation will provide a boost to house buying power. Even in a higher rate world, affordability won't snap back overnight, but like a ship finally catching a steady tailwind, it is now sailing in the right direction. Yeah. I like the way he said that. Yeah.
Affordability. Smart guy.
Yeah.
Right? That's why he's quoted. So you're curious, what in the world is happening in Southwest Florida? So we're going to show you the slides that we typically do, this time. So we're looking at sales price median. This is a rolling 12 months. I like to look at that, Randy, because I think month over month we're too sporadic. But when I look back for the 12 months preceding January, which was the last data we had, we're here sitting in February, Marco's in orange. It's really not that much different. We're pretty stable. We're pretty stable in the red is Fort Myers, maybe down a little bit. We're pretty stable in Naples, Cape Coral. I mean, yes, some of them are down, but they're not down by that much. And this is a sales price median closed sale price median. Okay.
But the one thing to say here, like, even though they're down just a tiny bit, if like for the folks that are using mortgages, which is not everybody down there, we know that. But if the prices are down just a little bit and your interest rate is down to full percent, it's more affordable than it has been in the last couple of years. That's that's the point to drive across.
Totally. Great point.
Yeah.
Closed sales in units. As you can see, I like to look at January, what's closed for as we go through season. In Naples, we're up, right? We're about a little bit up in Fort Myers. In the green, which is Cape Coral, we're up. Marco Island's a little down, but, that market kind of shifts around, but within a range. 55 this year, 60 in 24, and 65 in 25. So it's what month are they hitting in?
Yeah.
Again, closed units. Pending sales, look at these bad boys. Marco is pretty stable. Naples is way up by 140. Yeah, right? That's a great increase in pending sales. Look at, Fort Myers. They're up a little over 100. And then you've got the Cape, which is up 150. So these are fantastic numbers in the pending sales. We're going to see what that does to close price as we move out and these actually close. But great numbers. We're seeing a very strong first quarter, which, I was talking with our broker, Randy, last week, and we were at lunch. And I said, what do you think about the market? He goes, all the brokers were together and we were talking about it. It feels like a normal season since the first one since 19. Because, of course, 20, everything kind of fell off and then craziness ensued. Last year, it was super quiet in the first quarter. This year feels like a normal season for us.
Well, think about it. We've had interest rates coming up. We've had storms. We've had all that. If you really want to think back over the last few years, it's been really normal for a bit.
Yeah.
Feels great.
Yes, it does feel great. Today feels great. With that said, homes for sale. Look at this. The number of units for sale is like almost 700. Is that right? Down in Naples. I mean, from last year, that's, crazy. Look at that. 700 in Fort Myers.
Okay.
Almost 1,000 in Cape. And Marco's just not that big of a market, but it's still. So what does that tell me? We have less inventory. Our prices are pretty stable. If the buyer demand goes up, if this is your time, you're thinking about buying, don't wait, because honestly, this is a time you want to jump, because when all of this happens, buyer demand goes up and then the prices go up and then you missed out on a deal. So the time for that to buy, if this is your time, is now. Don't wait.
Yeah, I think sellers are getting smart too. They're going, it's a buyer's market again. Like we missed that really top of the market, and now it's leveling off. So again, if I'm a buyer right now, better rates, a little bit lower prices, I'm layering in. I'm buying now.
Yeah, buy now. Last two slides, Randy. I love this. I work with a lot of people that are selling, and if you are a current sales owner selling your home or thinking about it, this really kind of tells you the number of showings to a pending. So if you have less than these, then you still got to get more. If you have more than these, then you probably have a price issue, because that means that this is came off of the sources, the Naples board, and these are their numbers. So you can see we're anywhere from 5 showings in Fort Myers to the highest in Marco is 10. But as we layer that on, showings per month per listing, So that tells me Marco needs to have 10, and it's roughly 4. So I'm going to be 3, months plus out if my price is right. So half the battle is making sure you get that price right, in my opinion.
In a buyer's market, absolutely.
You got
absolutely. Buyers have a little bit more choice.
And if you're having a lot of showings and you're not getting an offer, then we have a pricing issue. Plain and simple. Mm-hmm. So Randy, we always end with, is it time to move? Mm-hmm. And you say?
I'm always a long player, and this is a vacation place. Like, I just deal with so many folks that have bought in years and years and years ago, and I've watched what has happened, the wealth that they have built by investing down here. Yeah, of course that's the time to buy.
Well, and if it's your time, right? So I've been in my same house. I'm kind of a dinosaur for 20 plus years. I've told you that. And the wealth that I've accumulated in that house, just living, not moving, not, flipping, not doing anything, has been incredible. So, homes are dirt, and your home is always a great place to invest, whether you're a first time, whether this is your second or 20th home that you own at this time. And what we'd like to do is help you get involved and get into that market if it's your time. So until next time, I'm Mary Bartos with the Bartos Group of Premiere Plus Realty.
And Randy Williams with Involved Lending.
Look forward to seeing you then.